The Peer-to-Peer Policy Pod. I'm Brian Morgenstern here with Sam Lyman, ready for another week of very hot topics about Bitcoin, business, and politics. Sam, where should we begin?
I think we should begin with the US government and what Uncle Sam is doing with his giant Bitcoin stack. A lot of people don't recognize that Bitcoin, even though it's under fire at all times by the US government, in fact, the US government is one of the biggest hodlers of Bitcoin in the world. They own over 200,000 Bitcoin. In this last week, we saw some movement with Uncle Sam's Bitcoin stash where the US government moved over 30,000 Bitcoin, which is about over $5 billion, if I'm not mistaken, just back of the paper math. So, Brian, I'm curious, is that reason for us to be concerned? Is the US government going to dump Bitcoin on the market? What are your thoughts on that?
So first, I should flag that some very knowledgeable friends and colleagues of ours dispute the amount that was actually moved, and that there were some test movements, and that you could do transactions where you send an entire large quantity like that, and then most of it is moved back to the same wallet as change for that transaction, and that only some of the Bitcoin actually stays in the new address where it was sent. Some very sleuthy and creative Bitcoin blockchain watchers believe that this is related to the Silk Road seizure of Bitcoin from several years ago, which was billions of dollars, well, now worth billions of dollars in Bitcoin. There are people in prison for this. It was the biggest seizure, I believe, so far in the history of Bitcoin. So the government, when it seizes assets from criminal activity, this could be, some of the classic examples would be like drug lords would have fancy houses or planes or cars, or of course, large stacks of money or drugs or whatever it may be. To the extent an asset is, can be legally used, it can be auctioned off by the US government. And they may even have some requirements to auction off assets. In this particular case, we're talking about, billions of dollars of Bitcoin that the U.S. government is holding, seized assets from old criminal cases. I think what we're seeing is probably the movement of those assets, we believe, based on public reporting, from a U.S. government address on the Bitcoin blockchain to a Coinbase address, so that it can then be securely transferred to the purchaser of the Bitcoin from, whatever means the U.S. government sold it in an auction or otherwise. And at this point, so they do try, and there are public quotes about this, the government tries not to dump huge quantities of assets onto a market to affect the price of that asset. So like if the government dumped billions of dollars of Bitcoin, that would have an effect on the market. And when this news broke, you saw the price of Bitcoin actually move in a downward direction for that reason. So the government tries not to affect markets like that. So presumably they'll try to space it out. There'll hopefully be a little bit more public reporting, a little more transparency about this. But we think what's happening is that they're doing test transfers from a US government address to a Coinbase address, and it's in the process of selling Bitcoin that was seized from old criminal activity. My personal opinion is that the US government, I'm not sure if they have this authority, they may not, but I think the US government should be hodling more Bitcoin as a strategic reserve asset, because it's done so much better than US dollars in recent years, and our country is $34 trillion in debt. So to the extent that the US government can hang on to it, it's probably not a bad idea from a taxpayer perspective. But if they're required to sell it, I think that's probably what's happening. They're doing some test transactions, going from US government wallet to a Coinbase wallet, and it'll be auctioned off at some point. I believe our employers, Riot Platforms, have in the past purchased Bitcoin at auction from the US government. I mean, many other people have, not just Riot. Many people have, but it's a normal process. And so hopefully people aren't too alarmed and the price of Bitcoin isn't really affected by this. But I think that's what's happening.
I'm with you on that one. I think that the US government has a real incentive to hodl as much Bitcoin as it possibly can. I mean, Bitcoin, when you look at it from an outside perspective, it's the fastest growing monetary network in the world. And who has the largest stake in Bitcoin as far as governments go? It's the US government. And so, as an insurance plan against a failing US dollar, if the US dollar continues on an unsustainable trajectory, it would be nice to have some kind of backup plan. What better backup plan than the hardest money in the world, which is Bitcoin? In addition to that, I think we want to remain having a stake in this global monetary network. To forsake the stake that we have right now, I think doesn't make much sense. I mean, we are a dominant country today because we are so dominant with the US dollar as the global reserve currency, and because we have so much influence in the SWIFT system. That's why I think it makes so much sense for us to HODL as much Bitcoin as we possibly can. And who knows, maybe in a future administration, we'll have a president with a lot of foresight who characterizes the United States as a HODLer, says we are a country that HODLs now. You know, in addition to El Salvador, where Bitcoin is recognized currency, we are a country that HODLs its Bitcoin. And I think that would very much be in our favor. We own over 200,000 Bitcoin as a country right now. So I'm with you, Brian. I think it makes sense to hold on to that as long as we can, to hold on for dear life, as the acronym HODL stands for. So we got some other interesting news just on the horizon. So true to the meme, the Bitcoin halving is set to take place on 4/20 or April 20th, right? If there's more evidence, if we need more evidence, we live in a simulation. I don't know what it'd be, because that's kind of crazy. But so the Bitcoin halving is set to take place on 4/20 or April 20th. Brian, what are your thoughts? Well, first, can you walk us through why the halving is so important, and what are your thoughts for what this might mean for Bitcoin's price going forward?
Yeah. I want one further comment on the reserve asset, because you mentioned El Salvador and President Bukele, and he actually announced that El Salvador is hodling Bitcoin as a strategic reserve asset. He not only declared it legal tender in his country, but he also established the Fort Knox of Bitcoin, where they're actually, he has it in like cold storage, like offline, like a hard wallet that's in a secure building. And he's using that to help stabilize his country's finances and his currency. So it's not a totally foreign concept. It's actually happening today. On your question on the halving, so big doings in the Bitcoin world. This is very important. About every 4 years, the halving happens. That is when the rewards for mining Bitcoin get cut in half. So today, when miners mine a new block of transactions added to the blockchain, the reward is 6.25 Bitcoin. On or around April 20th, it's going to drop in half to 3.125 Bitcoin. That means that we're seeing somewhere in the neighborhood of, I guess it's 900 Bitcoin a day, I think, entering circulation. That gets cut to 450. So we just saw a demand shock, which meant that Bitcoin basically doubled in price in a pretty short amount of time, because ETFs were approved, and we've seen, tens of billions of dollars flood into the Bitcoin market. That caused the price to go up. We're about to now see a demand shock. So first we had a demand shock. Now we're going to have a supply shock, where the daily coins entering circulation are cut in half. This should mean the price of Bitcoin is probably going up and to the right, as you say, so eloquently. I think that's what we're looking at. To simplify what that means, what the halving means, Bitcoin mining is hashing. It's a series of letters and numbers, and every 4 years, when you look at a graph of it, we started out here and the rewards were very high, and then the sequence gets shorter and it gets shorter and it gets shorter. So it's about to get a little bit shorter coming up in April, and the real consequence of that is half the Bitcoin will be entering circulation from 420 to 419 or thereabouts. It really depends on how many blocks are mined leading up to that date. So it's just an estimate, but that's what we're looking at. Did I explain that clearly? Do you have a better explanation for it?
I think that's a great explanation. If I were to liken it to another commodity, this is how I explain Bitcoin, the Bitcoin halving, to other people. So geologists have a general sense of how much oil is left to be mined in the world. They're always revising that number, right? But suppose that news broke tomorrow morning that the amount of oil that we thought could be drilled in the world actually it's decreased by half. That in fact, geologists were significantly wrong in their estimates of how much oil is left to be drilled. And the supposed oil supply is actually 50% of what we thought it was. What would that do to the price of oil? Obviously, it would spike because it's a supply shock. So that is the number go up technology of Bitcoin, is that every 4 years, you have this huge supply shock where 50% of the Bitcoin available to be mined, the amount of Bitcoin available to be mined decreases by 50%. And it happens about every 4 years. And so that's why every 4 years you see this bull cycle where the price of Bitcoin goes up significantly. What's unique though about this cycle is that prior to the Bitcoin halving, we've actually reached a new all-time high. From my understanding, that hasn't happened in any previous halving. Usually there's the halving and then afterwards, Bitcoin goes on a crazy bull run and there's a new all-time high. So Brian, given this new phenomenon of reaching an all-time high before the Bitcoin halving even occurred, do you think there's a lot more room left to run, or do you think that the halving itself has been priced in at this point?
Yeah, it's a good question. I do think there's more room to run. I also think there are some more market dynamics at play here. So I'll give kind of both sides of the coin, at least from my perspective. So on the one hand, you've had tens of billions come in through the ETFs, which has helped to drive the price up. That in turn has led to more interest in the asset and more regular people investing. And so that's contributed to the price increase. As to whether it's fully priced in, I mean, I still think only about 4% of the Bitcoin is held now by institutions. There's definitely more room to run. There's far more retirement plans, more large institutional investors. There's still many more retail investors who are still learning about the asset and getting involved in the market. So I do think there's more room to run. But here's the other side. Because we do have more liquid and more competitive market dynamics because institutions are involved and now stock market players are involved. We have, for example, hedge funds and others who maybe are, betting long on an ETF that's going to go up. Maybe they're shorting other aspects of the ecosystem, hedging their bets. So I think when you have hedging now taking place in the market a little bit more, I think it introduces a bit more uncertainty. And so we'll see how those trades play out. And if there's a little bit of a bump in the road and maybe it goes down a little bit after the halving and then up more after that, I think that would be a little bit more consistent with past practice. But as you say, we reached an all-time high for the first time pre-halving. So we're into a little bit of uncertain territory. And I think because of some of the market dynamics at stake in this halving, which didn't exist in prior ones, I think it'll be interesting to see if it follows a similar pattern from the past, or maybe it just keeps going up, or maybe it dips and then goes up. I should disclaim again that this is not investment advice, but that's how I'm thinking about it right now. And I'd be interested if you have another perspective, or maybe we'll chat with some of our viewers on Twitter to hear their takes on this as well.
Yeah, I think that every cycle you hear the phrase, "this time is different," and it becomes a cliche of sorts because it's sometimes a sign of a top signal when people say, "Oh, there's a new paradigm, this time is different." But fundamentally, this time really is different in the sense that you have billions of dollars in institutional money that's just waiting to come into the market, which could push Bitcoin to higher prices. And there's a reason that Larry Fink himself, the CEO of BlackRock, went on cable news the other week and said that he's, quote, very bullish on Bitcoin. He also remarked that he's incredibly surprised by the success of the Bitcoin ETF. It's interesting to note that the Bitcoin ETF is the fastest growing ETF in the history of ETFs. It reached $10 billion total, faster than any ETF prior to Bitcoin's ETF. So truly incredible success on that front. And he says that he remains optimistic about the growth of this asset class. I'm curious from you, Brian, are you also optimistic on the future of the Bitcoin ETF? And why do you think that it's been so successful?
Yeah, I am. He also remarked that he's bullish on the future of tokenizing virtually everything, which I think is a smart perspective because just to veer off the Bitcoin train for a moment, and then I'll come back on it. If you think about kind of the old way of doing business, for example, property records. Well, if you have a county clerk's office where they have all the deeds for every homeowner in that county, whatever it may be, and let's say there's a fire in the clerk's office and all the records are gone, well, that's a pretty bad scenario, obviously, for everybody, and you have to recreate everyone's property rights in that geographic area. Well, now we don't have to do that anymore because, for example, the Bitcoin blockchain being decentralized, if one Bitcoin miner goes down, the entire network still exists and there's carbon copies of it everywhere all around the world. So blockchain technology is highly useful. And the CEO of BlackRock, Larry Fink, commented along those lines as well. And I think he's right about that. As for his bullishness for Bitcoin, so coming back on the tracks here, yeah, I agree. I mean, it's quite a turn of events to have the general of the ESG army come out and recognize that Bitcoin is actually really valuable, that having hard, sound money is really valuable, that people value financial privacy to an extent, and cutting out middlemen and intermediaries to an extent, and having self-sovereignty over their assets, all of which are sort of Bitcoin values. I think that's a great thing. And I think as more people learn about it, the more it gets demystified, the more people understand it. I think the future is just getting brighter and brighter and brighter, because for those who kind of criticize Bitcoin and say, oh, it uses too much energy, or it's just magic internet money, whatever the criticisms may be, when people actually learn about it and they learn the facts, it just gets blown out of the water. That you have an asset that lives in computer code that is virtually unalterable and transparent and lives everywhere in the world all at once. And you realize it's, some fraction of a percent of the world's electricity is to secure this network. And you look at the US government printing unlimited amounts of money. I mean, at this point, we're at nearly 40% of the government's budget is deficit spending. We're at $34 trillion, and we're increasing the debt by $1 trillion every 100 days. It's unsustainable. And you look at the biggest expenses of the US government, it's the Defense Department, it's entitlements, Medicare, Social Security, and it's service on the debt. So which one do you want to cut, right? Like, we're sort of in an intractable place with our fiscal and monetary policy, which is why you've seen the purchasing power of $1 go down by, I think Anthony Pompliano, the great investor, said by his estimation, the dollar's lost 25% of its purchasing power since 2020. This is 4 years. And in those 4 years, think about how many hundreds of percent Bitcoin has gone up. This is becoming a nearly indispensable asset and a nearly indispensable inflation hedge, much like gold. This is digital gold, or as Fidelity Investments called it, exponential gold. It's just becoming more valuable and more important to our economy and for kind of stabilizing people's economic well-being. I just think that the future is so bright. We've barely scratched the surface in terms of people who are going to be hodling and investing and using Bitcoin to help secure their future as just a portion of their portfolio. Now, there's some maxis out there who are like, I'm not going to hold any more dollars. I'm only holding Bitcoin. You don't have to be that intense for this asset to be successful. You just have to see, most people see the promise of it and then allocate some portion of their assets just for like the sake of exposure to it, for stability and for diversifying their risk and all the rest. Larry Fink is right, is a sentence I did not expect to say multiple times in one of our podcasts, but here we are. He was right about two things this week.
Yeah. Yeah, Larry Fink has had quite the evolution. Lest we forget, Larry Fink was the king of ESG funds just a couple years ago. And now he's more or less the face of Bitcoin for institutional investors everywhere. So he's had quite the conversion to the orange coin, so to speak. And I think you hit on something really interesting, Brian. There is this new narrative that's really taking root now, where people are recognizing more and more that Bitcoin can actually serve as an ESG asset, not an ESG liability. One really interesting area of technology that is growing and has the potential to scale more and more is Bitcoin as a methane sponge. So what we're finding out is that you can actually set up Bitcoin miners on landfills across the country, and you can take the methane that comes from these landfills, you can convert that into electricity in a way that reduces the harm to the environment by 99%. And you can use that electricity to mine Bitcoin. In other words, you can take toxic gas and turn it into digital treasure. So it's this crazy kind of digital alchemy that has the potential to scale not only here in the US, but across the world as well. In addition to this, we also our own company, Riot, has partnered with Reformed Energy, and they have this special plasma gasification technology that can take both solid and liquid waste streams, and they can turn that into electricity, which then becomes digital gold. So you've had alchemists since time immemorial trying to turn random elements and objects into gold. And actually, that's what Bitcoin has made possible. It's made possible the ability to take what was trash, what was refuse, what was something that was unwanted and that was a burden on the environment. And you can actually take that and alchemize it into something that is a store of value that persists throughout time. I mean, that's a true miracle. And I think that's in part why Larry Fink had the conversion he did have to Bitcoin, is because he's recognizing that there are actual ESG use cases when it comes to Bitcoin mining. Oftentimes you hear gold bugs say, oh, well, Bitcoin has no commercial uses. You see gold in jewelry, you see gold used in certain car parts and medical devices, and they'll counter Bitcoiners and they'll say, where do you see the commercial use cases for Bitcoin? And now we actually have a response to that. Bitcoin is being used in renewable energy projects in Africa, for example, to help bootstrap projects off the ground by acting as a customer of last resort. So in Africa, you have 600 million people who don't have access to the grid. But through Bitcoin miners, hundreds of thousands of people have the potential to gain access to the grid, because you can build a renewable energy project in Africa, and using Bitcoin miners as the customer of last resort, you can keep that energy project economically sustainable. You can make sure that there's profit coming in, even when there's not demand on the grid from human beings. There's always demand on the grid from Bitcoin miners. So that's just one use case. In addition to, again, reducing methane emissions on landfills. I mean, Bitcoin has many use cases that are good both for the environment and for expanding access to the power grid for hundreds of millions of people across the globe. And honestly, gold could never. So I think that's a really interesting thing that's happening in the Bitcoin world. And let's be honest, Greenpeace at this point, let me start over. How do I put this? Greenpeace has for so long fought against us, but more and more you're going to see that Bitcoin mining is actually an environmental tool, and Greenpeace is going to have egg on their face. And just for the Greenpeace people out there, egg is not vegan. So that's double shame, I think. But more and more, we're going to see a shifting on this narrative. Brian, do you have any thoughts on that?
Yeah, I do. I mean, number one, this world needs more power, and it's going to come in a lot of forms. Natural gas is right now extremely cheap and abundant, and we need to take the shackles of government off, and we need to just create more dispatchable power for everybody, because using electricity is a symbol of human thriving, and we shouldn't be afraid of using it. But clean air and clean water is good for everybody, and we all want more of that. And so talk about one man's trash is another man's treasure. I mean, this project is really, the methane mitigation project is pretty incredible. You're literally taking trash out of a dump and you're converting it to fuel. And pretty much, a flexible electrical load like a Bitcoin miner can actually monetize that. That's a pretty great development. And it's going to work for many years, even, aside from mining. I mean, miners collect transaction fees. So as long as there's Bitcoin transactions going on, it's going to make sense to take some of the toxins out of the air and turn it into electricity and turn that into block rewards or mining rewards or transaction fees. So it really is pretty miraculous. You've been wanting to use the alchemy analogy or metaphor for a long time, and I'm glad you got to use it. And I hope people see it, and I hope they enjoy it. And yeah, we got to circulate that. Yeah. Alchemy, turning garbage into digital gold. I love it.
I mean, it's a reality. When you look at it from a first principles perspective, that's exactly what Bitcoin mining can do. And yeah, I just had to test drive it today. I'm like, today's the day I'm going to go for it. So Bitcoin is digital alchemy. Remember that. So Brian, just shifting gears a little bit, we've talked about all these great catalysts for Bitcoin, whether it's the evolving narrative on Bitcoin as an ESG asset, the approval of the Bitcoin ETF, or the Bitcoin halving. These are all bullish catalysts for Bitcoin. And on the horizon, we also have the 13F filings. So for those who don't know, a 13F filing is a filing that companies or organizations that manage over $100 million in equities, they need to report to the SEC some of the things that they're investing in through an 13F filing. So this takes place between April 2nd and May 15th. And you're going to see more and more companies disclose what they've been investing in over the past couple of months. So Brian, do you see the 13F filings as potentially a bullish catalyst for Bitcoin? And if so, why?
I think it's going to be interesting. I'm not yet prepared to say that it's going to be super bullish. I do think it's going to be informational. It's going to be educational. We're going to learn how some of the biggest market makers and institutional investors are thinking about this. We're going to learn, what kind of percentages, I hope we're going to learn that, like what kind of percentages they're allocating to this asset. And maybe we'll see some industry trends. Maybe we'll see that, the ETFs are approved, obviously. Retail investors can instruct their advisors to allocate some into the ETFs. Now we're talking about, institutions actually investing themselves. And I think if we learn that, some of the biggest capital allocators are putting 1% or 2% or 5% into Bitcoin, I think that's really, that's probably pretty bullish, I think. Also instructional. If people are still feeling it out and it's just kind of a trickle with this go around, I think that's instructional, as well. And that tells me at least that there's a lot more room to run, and that, the market's even further from saturated than we probably already think it is. So I'd look for the trends and the percentages to the extent we can decipher them from these filings, that it's not just retail investors. It's not just, the retirees or hopeful aspirational retirees. It's the institutions themselves allocating capital in here. That's the interesting part to me. And we'll see to what extent they do that. I think that'll be a price signal one way or the other.
I agree. I remember in the last bull run, it was huge news when people discovered that Michael Saylor had gone full bull on Bitcoin, that he'd been successfully orange pilled. And it was even bigger news when it was revealed that Elon Musk had been buying Bitcoin through Tesla and some of his companies. And so those were huge price catalysts in 2021. And I think you're just going to see more of those, if not this go round, in the next few months, as we get more news on who exactly is investing in Bitcoin as far as institutions go. So in addition to this, the Financial Accounting Standards Board, they actually changed a rule back in December that allows for companies to put Bitcoin on their balance sheets. This was something that Michael Saylor himself had cheered on for many years. So Brian, can you break that down a little bit for us? The FASB or FASB rule and why that's significant for Bitcoin?
Yeah, it's really significant that companies can have Bitcoin on their balance sheet and can account for that, and that they can denote the value as it changes year over year, and they don't have to kind of follow some accounting tricks, I'll call them, I guess, and kind of translate it into more traditional means of accounting for assets. The fact that you can just HODL Bitcoin on a corporate balance sheet now, I think it's another layer of legitimacy for the asset. It certainly makes life easier for these companies, including Bitcoin miners, which are some of the biggest corporate hodlers out there. Saylor has been cheering it on. It's obviously been very good for his company, MicroStrategies, which I think is pretty much trading now as a leveraged Bitcoin investment proxy. And so it's been very useful for him. I know the accounting firms at other corporate hodlers have been cheering it on as well. I think it makes life simpler, and frankly, these reports more accurate. So I think it's a very positive development. Prior to that, I think we had sort of a hodgepodge, including some what I will call unwelcome rulings from the SEC regarding how some publicly traded companies were supposed to report these things. Now I think there's sort of a uniform standard that is, like I said, easier to administer and more accurate, and adds that additional layer of legitimacy and kind of seriousness, just showing that like Bitcoin is real. It's here to stay. People trust it. It's got $1 trillion+ valuation. So people can sit around and say it's not real, I don't like it, all they want. It's sort of irrelevant. Like the market is speaking loud and clear. So very welcome development with these rules.
Yeah, the market is seldom wrong. And to the people who say, oh, can you show me what a Bitcoin is? Well, I can point you to the charts, which show, like you said, that this is over $1 trillion asset that has so much room to grow still. So a lot going on in the Bitcoin world. Is there anything else you think we should touch on before we close out?
I guess just a couple things. I mean, as you've said in the past, like we're still early. The price of Bitcoin is hovering in the 60,000s, high 60s, nearing 70 as of the airing of this podcast. If people were to invest, in Bitcoin sort of at parity with gold, it would about 10x from here. So, and like I said, there's a lot more saturation to go in the market. So I think the future is bright. The policy discussion going on here in Washington, not a big legislative window left before we get into campaign season. People still want to work on illicit finance issues to make sure digital assets like Bitcoin and others are not used by bad actors. So that conversation is kind of heating up. I'm not sure where we're headed with it, but it's something that we're monitoring for now. But big stuff happening. Keep your eyes out for that halving, and for some of the corporate filings coming out, because I think there's going to be big effects on the Bitcoin market.
Yeah, I think that about rounds things up. And
let's follow us on Twitter,
right?
At MorganSternNJ and
at Sam Lyman 33,
and subscribe. Smash that subscribe button on this podcast. We try to do it weekly. We'll do it as frequently as I can. And chat with us online, subscribe to the pod, and we'll be back with you next time. Can't wait to talk more.
Bye, everyone.